I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome to the show, Chris.
Thanks for having me, Jim.
Oil is around the $40 mark. You feel that's about what people were predicting?
Yeah, the last time we spoke, which I think was the beginning of April there, we were testing down near a critical technical level on the crude oil price, down around $36, $35 a barrel. And price had come right down to this technical point. And the reason I bring up technical point is because over the last really 6 months, crude oil has been moving in a very kind of technical fashion, meaning every technical pivot point, a Fibonacci retracement, any of these support or resistance levels based on technical analysis, crude oil has been ping-ponging around perfectly between these levels. When it breaks through it, it runs to the next level. And 2 weeks ago, you and I were talking here on the show, and when crude oil was just testing a significant support zone, and we saw the very next day prices, bottomed out at that level, and we've seen this strong move up from, $35.50 a barrel all the way up to about $40, $42, $41 a barrel today, right up to the next resistance zone. And it's just moving, really nicely. And I feel as though we could see crude oil squeeze a little bit higher, maybe for another day or two. But overall, I think crude oil here is going to start to stall out and probably pull back from this resistance zone and could easily test this $36, $35 barrel a level again over the next few weeks.
The International Energy Agency believes that by the end of the year, oil production will be at break even. It'll be about where it should be, but right now we still are seeing huge surpluses.
Yeah, I know. They can't shut them off quick enough, and it just continues to kind of spin out of control. And that's one of the reasons why I think, not that I trade on surplus of crude oil, but crude oil is, I think, putting in a pretty strong bottoming. I think it's bottomed. It's most likely bottomed, but I think there's a lot of room for it to go back down and test near those lows, by either down near the lows of $36 a barrel, or for it to fade all the way back down to around the $32 per barrel mark. So I think there's a lot of time for crude oil to still put a bottom in. It's going to probably fade back down, and it's going to base, which means it's going to trade sideways in this lower zone here for several more months before it probably builds up the energy to break out and start the next big run, back up to the $70 or $80 per barrel mark.
Is there much hope this upcoming meeting will be able to keep the production levels at least stable?
Yeah, I think it might, and I think that's kind of what's kind of spurred a lot of the recent move up in crude oil. I think just talks about it has got it kind of jumping up and getting people excited that it could support oil. But typically, I really don't think that's going to happen. I think we're seeing a very similar kind of setup in crude oil, similar to what we saw last October, where the markets come up, they push to a nominal new multi-month high, just like it did this week, and then it's going to stagger here for a couple of days, and then we're probably just going to see all that excitement probably fizzle back out, see crude oil move lower, and then eventually slide, back down to the lower $30 per barrel range. I think a lot of it's just hot air, I think, that's kind of popped up the price of crude oil with just the talks of what's going on.
I know countries like Russia and Venezuela are desperate for the cash they need to raise from oil. They're caught between a rock and a hard place, because if they cut production, that, of course, would improve prices, but they're not sure of that. So they just won't cut.
Yeah. Yeah, well, it's tough. Everybody's so tight. You cut production, there goes, a stream of income. You don't cut production, your profit per barrel drops. It's a really tough situation, and really, this is what the market does. It tries to correct. It shakes out, the weak companies. It just reorganizes, the financial standpoint of who's controlling kind of oil, and that's what it's doing. It's just going to, apply its pressure, and people are going to break, countries are going to break, companies are going under. Things will just recalibrate, get rebalanced, and then the whole cycle starts again. The market has no mercy. It could care less what's going on. And of course, low prices like this puts a lot of pressure on countries, companies, and, people in general. But that's just what happens.
Saudi Arabia, a $90 billion deficit. This is really hurting them, but were they the ones who decided to play chicken with the American shale producers? Yeah,
I know. There's probably a big force holding, the price of oil down, and I think, this is a big play for them to grab more market share, get their market share back, and squeeze out, all the companies that have found ways to get oil out of the ground really easily. It costs a lot per barrel, but they can get it out, and this is a great way for, I think, Saudi Arabia to, just grab their market share, continue to produce, and they're just going to do their thing and allow prices to stay low, or keep prices low for a long time.
So many governments for so long have relied on oil to provide revenue. Even at the gasoline pump in Canada, we pay higher prices than Americans do for gasoline because of the taxes. Our government's going to have to rethink the car once more and more electric cars are out there?
Yeah, I don't know what the government's going to do when they stop taking all of our gas tax money when we've all moved to electric. I'm sure they'll find some massive tax to nail us again. Right now, we're paying their way for everything. It's unbelievable how much us Canadians get nailed for income tax and gasoline, road tax. It's unbelievable. But they will find their way when electricity becomes much more mainstream. They will get their cut, no doubt.
Well, the Panama Papers show how popular it is to avoid taxes if you can.
Yeah, well, everybody tries to avoid taxes, but it ain't easy. Especially if you don't want to get caught. It's pretty much impossible. It's good old taxes. Guaranteed you're going to pay taxes, you're going to die. You try to avoid taxes, you'll probably die in jail. We got to pay them. If you're paying taxes, it means you're making money. So, it depends on how you look at it.
Well, in Italy, tax evasion, I think, is the national sport. It's not soccer. Sophia Loren, the actress, spent 3 months in jail for tax evasion. She said it was rather nice, actually, a nice old castle for her. And right. In Italy, they pay perhaps the highest gasoline taxes in Europe because they know you can't evade the tax at the gas pump.
Right. Yeah, makes sense.
We'll have more with Chris Vermeulen right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to West Vancouver Friday, May 6th at the K-Meek Center. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, I've heard because gold stocks were pounded down for so long, right now is probably one of the best opportunities to invest in some smart gold miners.
Yeah, you know what? Long term, looking forward, 2, 3, 4 years, I think gold miners are a screaming buy down at this level. It all depends on your time frame, your horizon, your risk levels, but yeah, gold stocks are already outperforming gold. There's a lot of gold stocks that are already up 100%, and the basket in general, like the GDX or the gold miners bug index, it's performing really well. I think it's had a really strong run. I think we're going to see it pull back and consolidate. But overall, I own a basket of, gold miners that I put in my long-term portfolio in the second half of 2015, and I'm holding those, expecting to hold those for probably 2 or 3 years minimum, and it could be a lot longer than that. I really do like this sector long-term. But, if you look way back on the charts all the way to the top that we saw in gold and miners and silver in 2011, gold miners are still in a downtrend. They're still making lower highs, lower lows. We've had this really strong rally, but we've seen this same percentage-based rally happen many times, 1, 2, 3, 4 times or so since the market topped. So just because we've had a strong rally, it's got everybody really excited, but all this is a very oversold bounce within a bear trend, and I do feel as though the bottom is probably in for the miners, but I do feel as though it's going to trade sideways in this bottoming formation for a long time. We could see it trade down here for, another couple months before it technically breaks out, and we see like a much more kind of broad-based move to the upside. So I like it. I just don't think, it's imminent to buy today, because I think you can get them after there's been some type of pullback or consolidation in a few weeks, and then your money will be working for you right away, because I think the market will move after that very quickly to the upside.
Why is there such a big gap between gold and silver right now?
Well, gold is by far, it's kind of known as the big safe haven. You talk to the average investor, and they don't really talk too much about silver. They talk about gold. They always talk about gold. So it's kind of the real safe haven. And when there's uncertainty in the markets, I always watch the difference of how gold and silver are performing. And by no question in my mind, gold is definitely the big, safe haven that money seems to flow to the most. And we saw this a long, long time ago. I think it was 2010 or so. We saw gold break out and run, and it was the safe haven play, and silver didn't break out for months and months afterwards. And I think the same thing is kind of happening right now. Right now, everybody's getting excited about gold miners. They've been waiting for a bottom forever. It feels like, it's been 4 years or 5 years here. And everybody's getting excited for gold to bottom. And they're not really thinking, the average investor isn't thinking about silver yet. Silver is kind of the more speculative play that the average Joe Blow kind of investor kind of gets excited about after it starts to move. And you don't really see that money pile in until a bit later. So I think we're going to see gold miners, which have been firming up, continue to hold ground and build a base here. Gold, I think, is going to do the same thing. It's going to try and build a strong base before it makes the next big run to the upside. And then we'll probably see those two move first, and silver could very easily lag. But when silver plays catch up, it catches up extremely fast and will typically outperform. So I really like silver, and I actually like it more than gold right now, because silver is actually kind of more undervalued. It's trading, it hasn't had this strong pop that we've seen in gold. So, right now I think the better opportunity is more or less in silver than it is in gold.
It's been a long time since I've heard anyone say that.
Yeah, well, well, it's just, it's just the way I see it. There's a lot of different ways you can interpret that, but overall, silver to me, I think, is going to be a really great long-term investment, and it's a much smaller market, so once it starts to move, man, does it ever move fast.
Plus, silver's a consumed metal. It's used in devices, your computers, and so on. Is that a factor in the price?
Well, yeah, I think it will be eventually. Right now, I think silver is fairly undervalued for the uses that it's used in. So I think in due time, silver is going to have a lot more appeal because, well, first of all, it's a lot cheaper than gold, so more people can afford silver. But then you've got a lot of industrial uses for silver that I think those industrial uses will continue to pick up, and that alone, I think, is going to start to really fuel the upward momentum in the price of silver in time.
Right, because you don't see people destroying bars of gold to make computers like you do with silver.
Exactly, yeah. And you don't, a lot of silver goes to waste. It just gets tossed out. There's a lot of electronics that people go and they'll just tear apart for gold as long as they know which companies are using gold. That stuff gets stripped out, and everybody tries to save all that stuff, but there's such small amounts of silver and all that stuff, they just toss to the side. So a lot of silver goes straight into the dump. And, it's not a huge amount, really, in the grand scheme of things, but, there's a lot of it that's going away and never coming back, all because of industrial usage.
Is China still on their program to buy as much gold as they can lay their hands on?
You know what, I'm not sure. I haven't really followed what China's been doing with their gold and silver lately, but I would think they're accumulating gold. I saw something this morning about their currency there. They're not going to allow anybody to exchange it into U.S. dollars or exchange U.S. dollars into the yuan, which was kind of interesting. And, I think the U.S., with China and Russia kind of building an alliance here, seems like there's going to be a lot of pressure on the U.S. dollar index, which, if we take a look at the U.S. dollar index, it's struggling right now. It's trading at a massive, really strong support level that if this level is broken, we are going to see a huge drop in the U.S. dollar index. And that drop, I think, is what is going to create that massive rally in commodities, specifically precious metals as the safe haven. We could have a multi-month or a year-long sell-off in the U.S. dollar index, and we could see gold and silver prices, double very easily if we get this percentage move in the dollar index to the downside.
Would that see the Canadian dollar rise?
Oh, yeah, for sure. If the U.S. dollar index goes down, that's naturally going to help the Canadian dollar. But, of course, if we see crude oil jump in price because the U.S. dollar is falling in value, it's going to be a double edge. We'll be back at par before we know it, and could even go beyond that. So, there's potential right now. We could lose 15 cents on the U.S. dollar index pretty easily. Once this level is broken, depending on what kind of news creates the break and what the event is, I think we're going to see something big happen in the next few months that I think could trigger a massive landslide in the U.S. dollar index. And commodities are going to go haywire and explode. Precious metals are going to become much more of a safe haven as a currency. People are going to use it as a store of value. People are going to be jumping into it as speculation. I think we could see a very strong move, but we really do need the U.S. dollar to break down in a big way. And the U.S. always has a way of kind of protecting and covering their butts. So who knows what they'll do? They've always seemed to be able to pull a rabbit out of a hat. But, everything to me is pointing to a much lower dollar, much higher commodity, or at least precious metal prices going forward.
I know the U.S. has complained about China lowering the value of their currency. Could the U.S. deliberately do the same thing to theirs just to keep their trade balance in a better shape?
Yeah, I don't know what the right solution is for that. That's stuff that I don't really pay too much attention to. But the whole currency war, everybody's struggling for a lower currency, and of course the strong U.S. dollar is, I think, really hurt a lot of companies because it's just so expensive. I'm going on a holiday to the States and I'm paying $1.30 something exchange. It sure makes, groceries and everything else that much more expensive. It's amazing. 30% is huge. And of course, all that happened really in the last year. So, that can't be good for the U.S. dollar. I don't buy stuff online in the States anymore. It's actually the same price for us to order in Canada and have it delivered than it used to always be cheaper to order from the States, half price, but now it's almost the same after shipping. It's crazy. It's definitely hurt them, the high dollar.
Chris, thanks a lot for chatting with us.
Hey, always a pleasure, Jim. Thank you for having me.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.